as a bottoms-up manager who really spends very little time top-down in terms of economic outlook, et cetera, what are you hearing from companies? What are your thoughts about the economy going forward?
We're hearing great stuff from companies, that they are very aware of their opportunities, their M&A opportunities, their capital expenditure opportunities. They're not necessarily acting on them, but I believe they're sort of well organized for going ahead in both capital expenditures and M&A. M&A has picked up dramatically. We are well into that cycle. We're in the fifth, sixth inning of M&A activity, but it will remain strong. I think you'll see more CapEx expenditures, not necessarily in the energy world, but you will see more in the broader economy.
How do you think the massive decline in energy of the past several months is going to affect corporate America?
There's a primary benefit for the consumer. We are a consumer economy. 70% of the economy is consumer based. Now, the rest of the world, the intermediaries of the world, are indirectly affected. Obviously, in the sector itself, they're highly affected by the price of oil. That is a primary output price that is extremely important to their P&L. But many companies serve the energy sector. Many industrials serve the energy sector. So there is a peripheral effect which is affecting those kind of companies. We're heavily invested in the industrial sector, so there is some crossover that has been negative.
So when you're talking about energy in the energy sector, are there any industries that you're finding opportunities in today?
We like our old favorites in the industry. We have always favored the service companies, guys that are out there servicing the wells, providing the equipment for the wells, providing maintenance, providing all sorts of intelligence for the wells. Those are the areas we are likely to be adding to.
The story about corporate yields last year, specifically high yield spreads, and the backup that we saw, especially towards the latter part of last year, and cost of capital going up for many companies. How do you view that from a small cap perspective?
I view it very positively. I view that as part of the path to normal, part of the path to the right way you price assets. Riskier assets should have a higher premium, and the spread has widened, and I view it as a step forward towards normalization.
What is your highest conviction theme for 2015?
Well, my highest conviction hope is that correlations will continue to go down, therefore setting up more opportunities for active management.